Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, February 3, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? Well, we have a number of things on the docket. You're going to want to stay tuned for this one. First, we'll start with she had a big, sizable gap down opening and fought back into the convergence of the 50 and 20 period moving average, closing right around the 50 period moving average. Still about $4 down on the day, 41 handles or so in the ES contract in the red on the day. But it really wasn't a bloodbath out there. Had the makings of a bloodbath overnight in the Globex session. But as you can see on this hourly chart, here's the low in the morning session right out of the gate, and she basically rallied him up for the most part the entire day long. A little pullback in the last hour or so, that's about it. So was it the tariffs? Is that really the reason that the market sold off today? Now, I'll offer this up. The tariffs weren't new information. What else was today? It was GAN Day. It's the midpoint, or as I like to call it, the midpoint phenomenon between the winter solstice and the spring equinox. How you doing? February 3. Also, I'll remind you that we're looking for a low February-March based on the 2025 forecast done in real time in the MSF Masterclass. But wait, there's more. This is something else that's taught in the cycles class. Check this out. Here's a monthly chart, and we had the pandemic low right here in March of 2020. Right now, we are 60 months removed from the pandemic low. Does anybody on the planet other than me think that's going to be an important development 60 months on the button? Is this going to prove to be a low against a high on a 60-month cycle? That's what we're talking about. Is this going to work out to be a high from the low 60 months ago? That is a possibility. There's way more than meets the eye with the market. So was it really the tariffs? Remember last week we talked about the ES and we talked about the fact that they made a potential lower high situation as opposed to the Spider that actually made a new high situation. Just of note, puzzle piece on the table. The weekly chart, she came down to run a test of the 20-week moving average today. Where does she close the week? We'll see. It's an open question. But we're interested to make sure for the bull case that she closes and maintains price above the 20-week moving average. Below the 20-week moving average, and the door would open for what? 575, give or take. What is that? That's the most recent breakup candle low in the sequence. From a swing trade perspective, I already have a zone of support. Lazy swing trader, automagical algo system, entered Union Pacific. Let's go to an hourly chart. Entered Union Pacific right here, okay, on the 27th of January. It was a short trade. Today, and she was down anyway, meaning we're up in the trade, and then we had the gap lower open today. First profit target hit, and it is now a risk-free, emotionless trade. When the market moves, the swing trades are going to book profit. There's going to be new entries. You're going to get the wide variety of features. Here's an example of a new entry today. I'm giving away the store here, but a new entry at 74.13 in Textron. I'm going to give you one of two that happened today, meaning new entries. Nice bounce off the entry. When the market's moving, swing trades are going to happen. Day trades are going to happen. Volatility is a trader's friend. Write that down. Put it on a sticky note. How about a bonanza from an intraday perspective? Day traders, scalp traders, live room members, inside the number members. How about a bonanza situation? Wake up to a pretty big gap down situation where the thieves in the night stole the rug pull event. Fair enough. Let's start with today's pivot coming in at 593.80. Here's a 5-minute chart. Right of the vertical is today's activity. You could see early in the day that mattered. Then we had what's called a shenanigans tail print down here later on in the morning session, and then she stayed above it all day. But wait, there's more. In the bull/bounce back case, the number up north in the sequence is 596.95. That's the next number in the sequence. You could also see how that had some meaning/importance for sure. We use these as targets, exits, for example, on long trades, which traders in the live room and inside the numbers did today. The flip side, or more bearish case, is below the pivot, which opens the door for more southern price action toward the likes of 591.70. And there's your 591.70. Now, this is just the stuff that's on the board at 0 dark 30. Let's scroll up and see how the morning unfolds. So 9:15, what's the scoop today? Well, pretty simple. They're killing the tape, but we've got a zone. 591.70 down to 590.05, give or take, is a support zone for a bounce back in the other direction. You're provided a line in the sand, and 593.80 is the pivot, which means it's a target on a bounce, give or take. That's the early schematic, meaning if we get long down there, the target, not the final target, but a target is certainly the pivot. So let's identify the zone, 591.70 down to 590.05. Right into the zone she came. We got long down there, had a rip-roaring rocket ride out of there. Traders booked as much as they want along the way. We had ridiculous numbers in the live room today. It was just a laundry list or plethora of winning traders and trades. All put on the board, sub-opening. Sub the market opening for business. Pause the video, read the notes, go back to the chart, and double check the work. Even as they were bouncing away early, 591.70 to 590.05 is still on the table as a support zone. And there's your 591.70, close to 10 o'clock in the morning, the top end of the support zone. And you could see everything is in here, everything you need to be successful trading the S&P during the trading day is in here from 0 dark 30 in the morning through the morning session. It's a morning business. We had 4 stocks on the move today. Only Apple hit its entry objective. Let's go take a look at the chart of Apple. So as you can see, Apple opened below the first number, which takes it technically off the table. She came into the second number, bounced back up, gave you the deal, gave you about a couple and a half bucks. 1% is what we're looking for the minimum required base hit. How do you like dem apples? We also have the list of tables where you get support and resistance numbers. Pause the video, write down some of the numbers, put them on your chart, see how price reacted around the numbers. Welcome to Inside the Numbers. Now check this out real quick. The low in this candle is 590.49. The low in this candle is a little higher, so we'll use the low of day, 590.49. We're going to fire up the magic calculator and put in 590.49 and hit calculate. The first number that comes up is 596.70. Now, there's your 596.70. Not to mention the number on the board earlier was 596.95. Those are pretty much the same. We're splitting hairs over pennies from 2 different areas, 2 different reasons. But you can see how this number was certainly important multiple times throughout the day. Whether it's 596.95 or 596.60, it doesn't make any difference. It's in the orb of that area was important. Now, from a magic calculator perspective, after you're long from lows of day, wouldn't it be nice to have knowledge of where an important number is for an exit opportunity on a rip-roaring rocket ride? Doesn't mean you have to exit the whole thing, but you got to take some profit there. The magic calculator. What's going on over in Camp IWM? Well, they were making a bullish, flaggish kind of situation here. We talked about all last week, but they gapped below it today doing what? breaking the chain below the moving averages. We talked about this. They tried to fight back today. Valiant effort. They got to get back inside here, recapture things above the moving averages, the 120 period moving average, to make it happen, Captain. They came up short of this gap down here. They find themselves kind of in no man's land-ish situation. On the weekly chart, you'll notice where the last big-time breakup candle low is in the sequence, which happens to coincide-ish with the 50-period moving average, the 50-week moving average. Interesting information. Are they going to work their way down there over the next couple of weeks or so? Or is that it? Are they just going to jump back above the 20-period moving average? Pretty much those are the two decision points. Camp IWM, favorite market leading indicator, down a little over 1% today. Down over 2% today, 2 1/3%, or $379, were the folks down at the transportation department. Now Sean Ryan's crew. They're my second favorite market leading indicator, but a number one canary in the coal mine. And here's the makings of a failure situation. They found support at the 200 period moving average before. We said they would find support there before. The swing trading product was long from down there, got profit and all that stuff. And now they failed all the way back down to run a test of that same area. First time, best time. Second time, no dice. Start getting below these lows over here and it will open up another leg down. And when you look at the weekly chart to clear up some of the noise, you could see where another leg down would begin to look in terms of market symmetry. Like all the way down here around 14.4, give or take. Well, 14.4, give or take. Market symmetry is another one of those things taught in the course MSF Masterclass. What about the Q people? Look similar to the spiders, rally back to the convergence of the 50 and 20 period moving average. Down 0.8%. Wasn't a bloodbath. It's just a down day. $4 in the Qs. It's $4 on a $500 stock. It's 0.8%. It's not a big deal. Not yet. Financials had the makings of a bloodbath situation, but they turned around like everything else. Bounced back up, finished down 21 cents on the day. 0.4%. Above all the moving averages, the trend is your friend. We're not going to make a federal case out of this one at all. Below all the moving averages, the trend is also your friend. You'll check out Smashmouth or the Philadelphia Semiconductor Index. They're weak. Down about $5, $4.84, 2%. Leading indicator on the downside of the tech space, for sure. Below all the moving averages, you got it. Very important weekly place. 50-week moving average. She's been riding it and riding it and riding it. Tested it last week. Opened below it this week. You could see what's unfolding here in slow motion when you look at the weekly chart. Faster motion on the daily chart. Slow motion on the weekly chart. It's easier to see things in slow motion. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.